Good morning, traders. Chris Buss here with a review of some chart setups and trade ideas for you. Wanted to do something a little bit different this morning. I am going to go ahead and do our standard run through the indexes and FANG names. I'll do that after this video. I didn't want it to get too long, and I wanted this to be a subscriber only video so we can privately discuss some things. I wanted to go through and take a look at the oscillators. We haven't done that for a while, and we can see here on the NASDAQ McClellan, 60 is our warning flag. That's when the yellow flags go up on extreme overbought conditions. We're in the upper half, but we're nowhere near, oh my God, 99, we're at 23. So from that perspective, not overbought at all. Very much the same look here on NYMO, which is the NYSE. You can see here, it is a very good, reliable indicator. And I highly suggest that you incorporate NYMO and NAMO, NAMO, $NAMO into your your pre-shot routine, if you will. You don't have to check it every hour. It doesn't change that fast. But, you can see 64, they pull the rug. 67, they pull the rug. 63, they pull the rug. So, can it get like this? Absolutely, when things get wild. This is March, minus 140 to plus 140, in a straight line. And then down here, minus 70, rip. Minus 68, rip. Minus 79, rip. Minus 81, rip. So you get the idea. This works great at extremes. We're not there yet on this indicator. So from that perspective, we're fine. Now, when we go to the percent over the 20 EMA, you can see that because of the run we've had, I'm going to show you all the market segments, but we are definitely in the upper range, and you can see that you can stay there for a while. But we're right up at the top. This is the mid caps. I'm gonna scroll through real quick. This is the NDX, 85% above the 20 EMA. Here was a buy point 5 weeks ago, 10%. That's how you can use these levels. And honestly, we didn't do that, or I didn't do that well on this last cycle. We could have been a lot heavier down here in the, in the NASDAQ names as this thing bottomed out. Small caps, way up here, 82%. So, from this measure, these are ripe for a pullback, but it's been a long time since, anybody was even interested in small caps. So there may be a persistent bid under these, cyclical smaller cap names as this vaccine unrolls and people become more optimistic about, the future. SPY, again, elevated above 75%. We've been there for, the month of November, which was a very strong month. I would get concerned. You start dropping down below 75, 70, then you're on a downward path. But remember, we'll see that in price. So when price, we'll see that on our SPY charts and our charts. So these are secondary indicators to price. We will see that on our charts, but we just need to be aware kind of where we're at, get your bearings, get your compass, if you will, that, we are extended. And, you know, I don't have it here, but it won't take you very long if you want to research it. We're much more extended on a sentiment basis. You know, the CNN fear greed gauge is like at 88, you know, out of 100, which is extreme. If you go to hedge fund positioning, I mean, they're all in. They're, you know, 98%, you know, 98th percentile of being long. You can drill through a lot of these market sentiment gauges, and they're way extreme. Does that mean we can't have a Santa Claus rally? Absolutely not. Does that mean a massive, you know, giant red bar can come out of nowhere for any reason or no reason? Absolutely. For instance, we've got the November non-farm payrolls tomorrow. We've got new unemployment claims this morning at 8:30. You know, God knows what it'll print. You know, not only this morning but tomorrow. But we're at that level where anybody could say boo, and, you know, people get panicky. And, you know, with embedded gains on the run from the November lows to now, you know, they shoot first and ask questions later. So don't look for reasons. Just look at the price levels. And when the price levels on whatever you're trading are triggered, you know, to get out, get out. Because I think whatever happens going forward is going to happen fast. It's not going to, you know, we dribble down, blah, blah, blah. I think at the elevated sentiment levels and, you know, extremes on stocks above the 20, you're going to see a couple, you know, back-to-back red bars, you know, to burn some of that off. Now, also what I wanted to get into is, you know, I've started to see, and people send me, you know, trading names, people that I know and you probably know too, are starting to, you know, time to get short talk. I'm not going there. I'm not shorting all-time highs. I've got my levels. I'm not going to take myself off the playing field. You know, I'm going to wait for the coach to pull me. I'm going to keep playing as long as I can play. And I can modulate, and I think you should too, you know, modulate your positions. Now is not the time to be, you know, at least from my perspective, you know, neck deep and short, or neck deep and longs, excuse me. It's a time to be in the positions you can manage well, be at a comfort level on exposure, keep in the back of the mind they could pull the rug at any time, and it's going to be at a time when you're not expecting it and you have no idea that it's coming. It'll be overnight, you know, whatever. You're not going to catch it. It's just going to happen. And you've got to have an exposure level that you're comfortable with when that happens and not be panicky about it. But I'm not going to try and be a hero and, you know, try and call that top. I tried that game for a while. It didn't work out so well for me. So I'm not doing that anymore. We could blow the roof off between now and Christmas. We've got a Fed meeting next week. Jerome Powell. I think it's, what is it? December 15th and 16th. No, wait a second. That might be right. December 15th, 2 weeks. He's going to be pumping. He's going to be pumping. God knows what he might say. It might be positive or it might be negative, but, they're still in the game. So I don't think that they're going to let anything get away from them. So, make a long story short, I'm staying long. Now, totally different topic. And this is why I wanted to, make this private and blah, blah, blah. I've got a move coming up to Florida. My live start to move, pack the bags, get in the car day is the 17th. Okay? So my time frame and my obligations are going to make it such that I want to personally wind down some of my positioning before things start moving fast in my personal life away from the desk. I don't want to be driving with a car full of junk and trying to manage 12 positions. I'm not going to do that. I'll keep some stuff on for January, but I don't want to be living and dying with every tick of the market while I'm trying to relocate and get settled back in, get all my facilities, internet, office put together, all that stuff. So there's going to be a period of time where between me and you, I'm going to go dark. There's just no way around it. So I don't want to I don't want to manage a bunch of positions while I'm doing that. So I will make it clear when I communicate to you that, when I close out, am I closing out because I see something wrong, or am I closing out because, I need to move? There's a big difference. So, okay, let's get into some of these setups. I hope that was helpful and I wasn't too long-winded about it. Keep these long ideas in the context of what you got going on. If you don't have a lot going on and you're looking for an idea, these may fit the bill. If you're loaded to the gills and comfortable with what you've got, file them away for reference or set yourself some alarms, and you can decide when and if they trigger, if it's something that you want to do. DXPE, industrial supplier, big bull flag. I would be alarming 2350 to 24 on a breakout. A breakout would target 32, but notice the massive void. This is your reflation, cyclical, industrial type of name. And before all this happened, it was a $45 stock, if not higher. So we're only halfway there at 24. So any breakout here into this void, I think, could move rather quickly. Fossil watches, big cup and handle. This is on the weekly. This projects 182%, and I've put that projection here. Big impulsive breakout candle on the weekly up to 1150, and now we've had 2 weeks of flagging formation. I think this is going to go, it's set up to go higher. You may want to drill down to the daily chart so this flag can be built out, a little more completely. But I would be alarming, somewhere between 1150 and 12 which was where these two candles top ticked and were rejected. If you get a break above 12, then easily 15 or 16 on the next leg higher. You can see there's a large volume over price bar here coming in at about 15. So that would be a nice trade. But I think this is set up to go higher. Expedia, 60-minute chart, big impulsive gap up and consolidating in a $10 range between 130 and 120. I would alarm both levels because you're going to forget about it. Alarm 130 and alarm 120 for potential gap fill. At a minimum, if you get a breakout above 130, I would be looking for 140. $10 box, $10 move. But if you look at the whole structure, given this big, impulsive bull flag, if you do a measured move off the bull flag, it could easily be at 150 or higher. And this is, again, a vaccine trade. Everybody and their brother, okay, let's take that vacation, that we've been locked up for a year. Let's get out and do something. They're all going to benefit, the travel stocks will benefit from that. So I like that setup. FUTU, textbook, breakout, back test, go. I really like this setup. I would have liked it more yesterday. $2 cheaper, right at the line, but you don't always get what you want. I like this to go higher. You can set your objective stop just below 40, but my first target would be the prior high at 50. So if you're sitting at 42, you got $2 of risk and you got $10 of potential upside. So that's a 5-to-1. That's what you're looking for. That's still a good risk reward trade to be long against 40 with a stop just below and look for higher prices. ICE, brokerage, exchange, $12 box. We are right at the top of it here at 106. You can watch that candle today. If it can hold 106, it projects a move into the mid-teens. 12, actually more towards 120. $12 box. 12 onto 106 is 118. So you're looking at a nice move higher if it can break and hold above 106. ZTO, totally different look. I think this is an express delivery company, and they've been beaten up for whatever reason. I mean, you just buy it here. Set your stop below 28.50. Buy yourself 2 or 3 months at a time and look for a move back up to 32 at a minimum. You've got a big gap here. Big. You've got a $2 gap from about 30.50 to 32.50. I mean, price knows something here, right? I mean, look at how many touches at, 28.50 that you've got. And here, I mean, if you get stopped out, you get stopped out. I mean, that's about as objective as it gets. So I like ZTO here out in time. As with all of these trades, please look at earnings. I have no idea if these guys are, this was probably earnings here where they pulled the rug, but I have no idea. I don't know for sure. And speaking of earnings, Splunk last night went splat I think it was down 40 bucks. That would be a good range break bracket trade for you if you're an active trader, or you can set that name up on a second day play on after today's range. So SPLK Splunk. Look for the giant gap down today. You'll probably hear all about it on your news source. LGVW, the latest SPAC du jour. And I know nothing about this other than some people were trading it and it's popular and it's had a phenomenal run up. What I wanted to show you is illustrate how you can use fibs on a stock that has no trading history. The power in these market profiles is the more trading history that there is, the more valid these trading bars and volume over price levels become. But this thing's only really been moving for a week and a half. So these bars are really not, they look like they're large and you can still use them as guides, but they're not gospel, if you know what I mean, because there really hasn't been much trading. So say you were watching this and you see the top get put in. This is a powerful move. You got to be thinking to yourself, where can I objectively get in? The levels are flaky. There's zero trading history. How could I approach this without just, throwing a dart? Here's how you do it. You put on your fib levels. Swing low to swing high. Okay? You are looking for reversal areas at 38%, 50%, and 618. Here, you had a level. You had a level at the 38%, and it hesitated but broke. Came down here and made a reach down to this cluster of candles right here. Now, as this went up, hopefully you recognize that was a little level there, a little shelf at around 1325, 1350, call it. So it's coming down, it's coming down, it's coming down. I can't tell you how often the halfback long entry works. It's the most common pullback fib zone for stock that's in bull mode. You'll either get a 38% or a 50%, and I believe 50% is more common, especially if you've had an extremely fast ramp. 50% pullback and then reacceleration. If you see a stock start to weaken, you'll see the pullbacks become deeper. An ultra fast moving high flyer may pull back into 38 and go, but a lot of times it'll be 50. And when a stock starts to lose gas, you'll start seeing the 61.8 come in more often. So on a stock like this, you had two clues. You had a reach down candle to a prior level. That was your first clue. Your second clue was that it was at a halfback long entry level. And the only thing you can do here is that's your objective shot. You came down, then you reclaimed the 50% fib, You get long at 13.75-ish, and you set your stop 50 cents below. That's all you can do. And hopefully you get the move in your direction. But if you don't, I mean, that's the risk you take on that, on a stock like that. So I hope that helped. NEO is another one. Big reversal candle yesterday. Some guys in the trading room got that. Reach down candle to a prior level of support. Big bounce. Now today, you have got a pivot right here at 48. That's the 21-day EMA. If you can clear 48, you can use this volume over price bar as support and use your 21-day as a support level. Now that these are curling up, 21 period. This is a 60-minute chart. Same thing holds true. Once you clear 48, you'll be above the 21. And then if you clear 49, you'll be above the 50. And then I think you can look for 52 and higher. But 48 is your pivot this morning. If you can pop that, I think you're in good shape. Now, what may help this, Tesla got an upgrade last night and they were up like 30 bucks after hours last night on a Goldman upgrade. So I haven't looked at it this morning, but if Tesla's up, that'll probably lead the way on all these EV stocks. So if you're an active trader and that's what you want to do, you can watch NEO as well. A lot of guys trading it and have made a lot of money in it, and probably lost some money here, but that's trading. Pick your levels that are well defined, know them, and then take your shots with stops just on the other side. Blink, same kind of idea. I've thrown on a fib level from swing low to swing high. We've had corrective action, reached down to the 20. Now we got a reversal candle, and 2350 is your pivot. If you can reclaim the 8-day right here at 2350, I think you take it long and look for 27 and potentially 34. So did not quite reach the halfback down here at 1750, but you did tag a well-defined EMA here at the 20 that acted as support. So, okay, I am going to move on. I'll close this video up. I'll get it out to you right away. It'll give you something to chew on early if you're an early bird at your desk while I'm getting the indexes and FANG names video rolling. Look for that in a little while. Thanks. I'll talk to you soon.